Welcome to Luca and Miguel. Enjoy the video.
You already have a chart and price action visible. Start by identifying a clear swing at a B move. Once you locate A and B, place the first two anchors, then set the C retracement point inside that range. You must use 3-point anchoring so extensions project logically beyond B. Make sure to input standard levels like 61, 8, 100, and 161. 8%. These provide your first target zones and tell you where momentum may resume or stall. Once done placing basic extensions, refine them by cross-checking confluence factors like volume spikes, trend lines, and MA clusters. This is why extensions matter beyond simple geometry. You should adjust anchors if market structure shifts, because moving A, B, or C by a few bars changes projected levels. Also, make sure to validate targets across multiple timeframes. A daily extension backed by 4H confirmation gives higher probability entries and clearer stop placement, reducing false breakouts and improving risk-reward. You complete the setup by defining stops, targets, and position size relative to your risk rules. This turns projections into a trade plan. Then execute when price action and confirmation align, and monitor how price interacts with each extension level. If things go wrong, extensions miss or price whipsaws, pause and reevaluate anchors and the current market regime. Sometimes a different swing or time frame yields better alignment. Keep a quick log of errors so you can adjust your anchoring technique over time.
Thanks for watching and please subscribe. It's the best investment you'll ever make.